Welcome back. There is a precipitous decline in the market and it's getting only brutal, the sell-off, as by the minute. In fact, as we speak, we were just talking about how the Nifty has breached that 17,600 mark. Well, we're 50 points below that as well. 17,550 on the frontline index. The Nifty banked down almost 1,400 points, 1,100 points shaved off the Sensex as well. And what's not looking good is the market breadth. We have nearly 10 stocks declining for every stock which is advancing. Frontline stocks falling 10, 15, some even 20%. So there is a fair amount of fear, and that's reflected in the kind of jump that we're seeing in India VIX. One of the highest single-day jumps that we're witnessing in that volatility index. The India VIX is up almost 22%, and these aren't just pre-budget moves that we're seeing. The India VIX has spiked about 29% this week itself. Prashant joins us in the studio. We also have Nimesh with us, who's made a fair amount of calls to the dealing rooms, etc., trying to get a sense of what's happening. Prashant, you know, what a big decline. What is it that the market's fearing?
I mean, it's got to be, of course, what's happening with the Adani Group stocks, right? That's of course, a big part of it, what you're seeing. Because, you know, let's put up Adani Ports, for example, right? I mean, it's a business which is... which runs some of the largest ports in the country. It's a solid business. I mean, it's a business which many investors over the last 10, 15 years have visited. I mean, the ports and seen these businesses, seen the ports operate. And out of the group, I mean, it's also the most widely tracked company, right? I mean, it's a well-tracked company. That is down 20%. So I think there is some nervousness, of course, around what is happening with this group. It's, of course, one of the largest in terms of market capitalization. And I think that is feeding through in other parts of the markets in various ways. I mean, when you have this kind of market situation, it's very tough to say where, you know, where the next impact really comes through. Banks, of course, it's a bit indiscriminate in that sense also. I mean, I have to say, because I think, you know, eventually we've seen these kind of episodes before as well. The dust does settle, but in the midst of it, it's very, very difficult to say that, well, you know, this is... I'll tell you, Kotak, for example, this morning, Kotak Institutional Equities, one of the brokers which covers Adani Ports, had a note out, and they said, well, they sort of value Adani Ports at some 11 times EV/EBITDA, the price target of 840. I mean, stocks at what? 570, right? So this is what, I mean, a little bit of panic can do to the market. And I think that is what the market is in the grips of right now. On the Nifty, if you can have the intraday up, you know, because of the magnitude of the fall, 200 points on Wednesday and now 300 plus points on today, what has happened is you got to zoom out a little bit and take a slightly longer term view of the Nifty. So, you know, the December lows, the January lows, all those are out of the way. And what you're now looking at is the full retracement, you know, Fibonacci retracement levels of the full rally from 15,183, which was the June low, to the all-time high of 18,887. The first retracement, which will come into play, is the 38.8% retracement. That number is at about 17. I just sort of drew that. It's 17,472. We're at 17,563. It's basically about 100 points away with this precipitous fall that we have seen. I mean, a bit of panic, of course. I mean, very, very evident if you look at the screen.
Also, you know, Prashant, there's this fear psychosis, right? Generally, as they say, the markets take the stairs up and the elevator down. I just want to put one brokerage view on board. Jefferies put out a note this morning on the Adani Group where they said that over the past 5 to 6 years, the group has diversified its borrowing mix and reduced the share of Indian banks in their borrowing. The share of Indian banks in their borrowing has gone down from 86% in FY16 to 33% in FY22, just quoting from the Jefferies report. And they say we do not see any material risk arising to the Indian banking sector. So, you know, this is just one view, of course, that's put on board. At the moment, there is panic, but, you know, there are a lot of opinions coming through. But Nimesh has been working the phones as well. Nimesh, what is the view of the dealing room? And on the stocks particularly, what are you picking up?
Okay, so first, let me talk about the Adani Group stocks, because as we speak, you know, clearly it looks like there is panic because now Ambuja Cement is down 25%. All the F&O stocks of the Adani Group, Adani Port down 20%, ACC is now nearing 20% fall, and Enterprise is on 15%. So let me start with Ambuja Cement first. So, you know, why I'm talking this, there are some important numbers to track when we say there is panic selling and there is panic on the stocks. The current price of Ambuja Cement is close to 347. Now, if you look at the open offer price of Ambuja, that was at 385 rupees per share. if you look at the preferential allotment that Ambuja did to the promoters, which is Adani Group, that was at 418.78 per share. So we are way below the preferential issue price as well as the open offer price as well, as far as Ambuja is concerned. And this is one company which has got a solid track record, solid assets, backed by cash flows as well. And there is a tailwind of the whole cement sector doing well going forward. So while there is panic, yes, the stock is down 25%, but do remember the two data points. One, the open offer price was 385, and the preferential allotment was done to the promoters at 418.78 per share. So that is Ambuja. Even if you look at ACC, the current price is now all the way up to 1765, down 20%. But even if you look at in case of ACC, the open offer price of ACC was 2,300 rupees per share. So it's way beyond the open offer price at which the promoters have bought from the Holcim Group. So that's ACC for you. Even if you look at Adani Ports, even Prashant pointed out, the stock is down 20% down circuit as we speak, close to 575. And Kotak today put out a note and they said it's a great asset to own. Valuation-wise, it's now come below 11 times FY24 EV to EBITDA, and they have a target price of 860 on the stock. So again, that stock is way beyond what Kotak's target price is. Even if you look at Adani Enterprise, that's an important one. Remember, the FPO started just today for retail and non-institutional investors. The current market price, it's fallen to all the way to 28.95 as we speak. But if you look at the price band of the FPO, it's between 3112 to 3276, and on that there was a discount to retail investors of 64 rupees. Even if Adani Enterprise is now trading below the FPO price as well. So that again has something to note about. Remember, the anchor investors put in money at the higher end of the upper band at a price of 3276, and they've raised, the commitment is of close to 6,000 crores, but only half will come, like 50%. So 3,000 crores has come as far as the anchor commitment is concerned. So these are the numbers as far as the individual Adani Group stocks are concerned, whether it's Ambuja, ACC, Port, and as well as Adani Enterprise. Looks like there is panic selling across all the Adani Group stocks. So that's the overall number as far as the Adani stocks are concerned.
Okay, so that is about Adani Group. Thank you, Nimesh, for all those data points. But generally, your conversations with all the dealers, what is it suggesting? Is it only led by this group, or there is more weakness that we're expecting in the markets as well?
There is more weakness, and the overall feedback was there is selling pressure in the financial names. That's a bit surprising. Today we had CLSA and Jefferies both putting out a note suggesting that there is no big risk to the Indian banking sector as far as the Ambuja Group is concerned. But still, then there is massive selling, is what I understand, in all the financial stocks for secondary running. I mean, where do you see the bank index falling almost 6% in 2 days? Yeah, on Wednesday we saw 3% cut, and now as you speak, the bank index is down 3.5%. So that's clearly a feedback that there is selling pressure in all the financial names, especially the private bank stocks in today's state from the overall FIs. The other feedback is there's going to be a small market at close Nifty basket buying. Now that needs to be seen whether that plays out in the last half an hour of trade in today's closing. But that's overall feedback that there's going to be a small MOC buying as well in the Nifty names. In terms of buying interest, there is clearly some bit of buying interest in the auto names, and some bit of small nibbling is happening in the technology stocks. So those sectors seems to be favored, but there is clearly selling in the financial stocks. And of course, we spoke about the Adani Group stocks under pressure and some key data points that I've highlighted in terms of individual stock prices in all the Adani Group names.
Right, Nimesh, Prashant, thank you so much for joining us and giving us the insight. In fact, as we speak, the Nifty at 17,550 is just at the 200-day exponential moving average. It's seen a bit of a bounce from there, or planning to hold on here. What happens from here is something that we'll have to watch. 200-day exponential moving average on the Nifty, 17,550. And Nimesh pointed out some of the fundamentals of the Adani Group stocks and the prices at which promoters have also bought stake in ACC, Ambuja, etc. But as we speak, it seems like fear has fogged all those fundamentals. Adani Ports has now extended its cuts. It's now down 25%. And mind you, this is a Nifty stock that we're speaking about. Adani Ports down 25%, Adani Ent down 15%, and all the other Adani Group stocks down anywhere between 15 to 22 odd percent.
Well, the good gets thrown out with the bad, right?
Right.
When you have panic, and I think what you're seeing, and I'm just looking at, we were talking about the Adani impact, but look at what's happening in the rest of the market as well. And this is what I was saying, that when there is a little bit of panic, you want to first, you should first ask questions later, because and I think some of that is happening. Banks, of course, we saw selling, which is only accentuated. But even, excluding this story and the financials and the Adani Group, etc., there is a fair bit of selling which is coming
It's not only
through.
the bank stocks. Even if you look at the PSUs, which have been slightly overbought from the retail investors, they are getting sold into. There is nothing to do with HPCL down 7%.
That's what I was looking at,
PFC, RS is down 6%, BHL is down 7%. So it looks like there is retail capitulation now from the F&O side, because those were overbought stocks, the so-called PSUs.
And
now
to boot,
those are getting sold
earnings
into.
have not been all that. I mean, look at Team Lee's. I was looking at 9.5%. Dixon was with us on the channel
19%.
earlier. 18, 19%. And I think it's kind
Indus
of
Towers.
one feeding into the other. Bad earnings getting beaten down more with the market being down, and of course exerting pressure vice versa as well. So it's a bit of a negative feedback loop we've got going.
And to think of it, Prashant, we started the day by saying that it's a good morning because there's a holiday before and a holiday after. And
Well, that still holds, right?
the only saving grace, right, that you're entering into a weekend, you'll have to trade tomorrow. All right, but keep an eye out on the 200-day moving average. It's still holding for now. 17,290 is the 200-day moving average. All other averages have been breached on the downside. It is an ugly day, no two ways about it. The Nifty is now at the lowest point of trade. It is free fall in the market that we're looking at. The Sensex over 1,000 points gone. But thanks a lot for watching. We will wrap up with this edition of Halftime Report. Business Lunch will take all the action ahead.